I'll be going through with you Optum stock. Just click there, click enter, and you can see the stock name here. You can see the symbol here, UNH. And if I buy the stock right now, I have to pay 250.05 US dollar for one stock, and the market cap is in billions, which means a big size firm. The dividend yield is 1.73%. And I just want to point out, if a company is paying a dividend, that means they're financially very strong. And because after paying their loans, liabilities, creditors, they still have extra money left. That extra money they pay to shareholders as dividends. That's brilliant. So don't be worried that if a company is paying a very less dividend, it is a strength, not a weakness, because that means they are financially very strong. Let's go to when was this founded. I'll just go to Wikipedia and I can see this box here. You can see founded 1977, 42 years ago. Let's go back, and I want to know when what the employees think about this firm. So what I'll do is I'll copy this, I'll paste it here, click Indeed reviews, click enter, and let's see. So I can see we have 15,500 reviews, and it's 3.6 star, which is above average. And you can just read through the pros and cons yourself, and you can see the salaries they are getting. The employees are getting the photos of the firm, jobs, and the questions. And let's see in Glassdoor if what reviews people are getting in Glassdoor for this one. So I can see that we have 11,000 reviews and we are getting 3.4 star. And read through the pros and cons yourself. Check out the jobs listed, the salaries employees are getting, the interview questions, the benefits they're getting, the photos of the firm. Let's go to Just Your Patent and see what the patent this firm has, and click enter. And I'll just remove this part and click enter again. And yes, so I can see the patents here in 2013. I just want to point out, don't concentrate on inventor, because these are people who invented but they don't have full rights. Applicant and assignee has full rights of the patents, so that's important. In 2013 they have a patent, then in 2010 they have a patent, 2013 they have a patent, and so on. So they have many patents. That's brilliant. Because the more patent a firm has, the more stronger it is in the market, and it's harder to beat that firm. That's brilliant. And please check if they have recent patents in 2015, 16, 17, 18, because that means they're still innovating. That's brilliant. So in 2017 they have a patent, 2015 they have a patent. That's recent patents. That's brilliant. That's very important. 2018 they have a patent. That's brilliant. So this firm is doing very good in terms of patents. Now let's go to Yahoo Finance. I want to see the key executives and what salaries are they getting. So let's just paste the form here, and they say there's no matching. So if you are confused about which one to click, I'll just I'll explain you briefly. Just go to Google and you can see the symbol in Nasdaq, UNH. Just click that symbol. That's fine. And let's go to profile, and sector is healthcare industry employees. And now I want to tell you there are 5 key executives. All of their salaries have been shown. So it builds trust with the firm, because that means all of their salaries have been shown. They haven't hidden anything from us, and that's brilliant. And lastly, I want to go to macro trend. I want to see the ratios. Go to price ratio, price book ratio, and paste in the symbol from Nasdaq. And I just want to explain you briefly about price book ratio. If it's less than 1, that means stock is cheap, it's a discount, it's a sale, it's a bargain. So that's a right time to buy if it's less than 1. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. So let it load first. Be careful with it, because be patient with this website, because it takes time to load, because it has a lot of data. So don't worry. But once it loads, it makes your life quite easy. So be patient with it. So I'm just waiting for it to load. Please let me know if you have any questions for me, or if you have any suggestions for me. If I'm just going too fast for you, please let me know. I'll explain something that you didn't understand maybe, or you want to add something to it, or you want to share with me your own research about this stock. Please let me know. Right now it's 4.38, which means the stock is 4.38 times more expensive to buy right now. In 2018 September, it's 4.85, which means stock is 4.85 times more expensive. Somebody who bought in 2018 September, they paid $265 to buy something that was $54 worth. They bought it 4.85 times more expensive. Right now, it's 4.38 times expensive. If I just want to see that in 2010 June, it's 1.12, so which means people who bought that time, they paid $24 to buy something that was $22 worth. So you need to be careful about that. Let's go to other ratios and check out current ratio. If current ratio is less than 1, that means that the stock is risky, it's dangerous to buy because liabilities are more than assets. If it's 1.5 or more than that, that means stock is safe, it has a good margin of safety. Right now, it's less than 1, that means stock is dangerous because it means that liabilities are more than assets. You can see vertically up, liabilities are more than assets, stock is very risky. Let's look at the previous one. Has it ever been 1.5 or more than that? Okay, so I can see since 2005 up till now, the current ratio has always been below 1. That means stock has been always risky, very risky, because since 2005 up till now, recent 14 years, the liabilities has always been more than assets. So this is a very dangerous stock. Let's look at debt equity. I'm looking for 0.5 or less than that for it to be brilliant. This ratio will show me if the stock is mainly operating on debt or equity. I'm looking for 0.5 or less than that. Let's have a look. Okay, right now it's 0.63. It's a little bit above 0.5. It's a dangerous stock. Let's look at the previous one as well. Has it ever been 0.5 or less than that? Yes, it has been. So it's fluctuating. So previously it's more than 0.5, and then it's less than 0.5 for a while, and then it's more than 0.5. So but right now it's dangerous stock in terms of debt equity. Let's go to return on equity. We are looking for 8% or more than that for it to be brilliant. Right now it's more than 8%. That's brilliant. Let's look at the previous trends. Has it ever been below 8%? No, it hasn't. Since 2005 up till now, since recent 14 years, it has never been below 8%. So return on equity is brilliant.